Hello guys, it's Max here from Daily Market Movements and welcome to another Market Outlook video where today we're going to be discussing the trading week running from the 26th all the way through to the 30th of June. So in terms of economic data this week, we have a lot on our hands. Starting off on Tuesday, we have the core durable goods number. And then on Wednesday and Thursday, we hear from Fed Chairman Jerome Powell. And then of course on Thursday, we also have the GDP figures followed by the initial jobless claims. And then to end the trading week on Friday, we also have the PCE figures as well. So lots going on in terms of economic data. Now, one thing that I'm really focusing on going into this week is whether there's evidence that we have dip buys that return to the market. Now, if you watched my Market Outlook video last week, I did forecast that we were likely to see some sort of consolidation going into last week. Hence, we're likely to see some downside volatility in the markets. And that's exactly what we had. I think we had the Nasdaq 100 and the S&P 500 trading towards the downside by roughly 2.5 to 3%. That's off the back of a very strong move higher. But, going into this trading week, are we going to see some dip buys return to the market? I have done a lot of research over the weekend, and there's actually evidence that this year is the second strongest year in the past 80 years of historical data where dip buyers have returned to the market and bought the S&P 500 after a 1% decline. One thing that I would definitely urge many traders who are watching this video to be very cautious about is that, yes, on the daily charts, the markets may have been overbought, but I urge you to look at the monthly and the weekly timeframes because the Nasdaq 100, for example, on the monthly is nowhere near considered to be overbought. Going into last week, yes, on the daily chart, we had some very, very overbought readings, but on the monthly charts, we have an RSI which sits around 55. But let's just talk about the major indices from more of a technical perspective. Starting off with the Nasdaq 100, of course, we traded up towards around 15,200 just over 2 weeks ago, and we have seen some consolidation. We currently find ourselves trading down now at around 14,800. If dip buys return to this market, I think it's highly likely that we go and target the swing highs up around 15,200. I think one thing that you need to understand going into the markets this week is that weeks like last week, I heard a lot of news headlines with investors and hedge funds and money managers coming out saying that they've trimmed positions in Nvidia. And I think it's very important that you understand that they're not trimming these positions because they no longer like the name. They are trimming it just from a risk management perspective. For example, if you started in January with a risk exposure in your portfolio to Nvidia of 2.5%, well, that stock's up over 190% at this moment in time. So that means your 2.5% position has now grown to 7.5% within your portfolio. And that's just simply too big of a position for many of these hedge funds to show their clients. So they're having to take some off the table. They're having to skim their positions. But again, it doesn't mean that they don't believe in the fundamentals. It's just pure risk management. So I do believe that money will flow back into some of these top high flyers in the coming days and weeks ahead. And hence we will see some dip buying. And I wouldn't be surprised to see the Nasdaq 100 return back up towards 15,200. Then moving over to the S&P 500. Now the S&P 500 did trade all the way up to 4,440. It hit the foot extension on a fib chart, which I've been analyzing on my daily videos. Of course, just like the Nasdaq 100 and the Dow Jones 30 last week, we did see some consolidation where we have declined ever so slightly. But again, I'm looking for evidence of a dip bias to return into the market for us to trade back up towards those swing highs and to potentially break above it. I have a target of around 4,500 for the S&P 500, and I do believe that we can reach there within the coming weeks. Then moving over to the Dow Jones 30, the Dow Jones 30 recently formed this inverted head and shoulders pattern where we broke above the neckline. We went on to hit 35,000, but since then we have pulled back. Last week we did go and test that neckline, but we seem to have broken back below it. So we do have the 50-day EMA offering plenty of support, but we do need to see a bounce here. One real positive element that I've seen over the past couple of trading sessions is that we've seen a real broadening out in this rally. We've seen stocks in the energy sectors, in the financial names start to participate in this rally, and that's very important if we want this rally to continue over the next couple of weeks and months ahead. So the Dow Jones 30, I know I've said it and I sound like a broken record because I keep coming on here on the Market Outlook videos and saying it, but it's very important that we see participation in the Dow Jones 30 if we want this rally to continue for the second half of 2023. So that's it for today's video, guys. But just before you go, just want to let you all know that I've got a free trading signal group chat over on Telegram, and if you'd like to participate in that group as well as receive my free daily market research, which I post every single morning, then please scan this QR code on your screen. It takes 10 seconds to sign up and it's completely free of charge. But thank you very much for tuning in for today's Market Outlook video, and I hope that we all make some money going into this trading week.